Thank you for always tuning into the Stock Market Update. Today, we are here to bring you the latest stock market news on this 15th day of November, 2023. Stay tuned. AECOM, ACM, an infrastructure consulting firm, has seen its shares climb to $86.47, up 7.45% after issuing their earnings report for the fourth quarter, July to September period. The reported earnings per share, EPS, of $1.01, and revenue standing at $3.84 billion, both superseded predictions of 97 cents and $3.7 billion, respectively. While AECOM has downgraded its EPS estimates to between $4.35 and $4.55 for fiscal 2024 from the previous forecast of $4.75 or higher, it still exceeded analysts' expectation of $4.38. AECOM also raised its adjusted EBITDA forecast for the fiscal year to between $1.07 billion and $1.11 billion, signaling an upward trend. The company's order backlog remains high at $41.17 billion, although it is slightly lower than the anticipated $41.86 billion, suggesting a robust infrastructure trend according to analysts. This, in turn, might enable AECOM to sustain steady shareholder returns over the long term. The company, moreover, has boosted its quarterly dividend payout. This has been hiked from $18 to $22, marking a significant surge compared to the anticipated $0.20. This adjustment could prove to be an effective strategy for attracting more investors while at the same time rewarding existing shareholders. In the vast context of technical assistance and management support services, which span transportation, environment, energy, and water resources amongst others, AECOM operates worldwide. They have a considerable stake in the comprehensive management of these critical infrastructures, proving to be a key player in their integral operational efficiency. Shares of Lifeway Foods Incorporated, LWAY, saw a significant uptick, surging by 37.05% to $12.86 on the day. The rise follows an analyst's upgrade of the company's investment rating to buy and the establishment of a target stock price at $13. This positive assessment is attributable to the strong financial performance as indicated by the results announced the day before. Lifeway Foods managed to surpass its own profit and revenue estimates for the fourth quarter of the year, July to September, bolstered by a rise in sales and favorable market conditions for dairy. The analyst criticized the stock's steep decline the previous day following the earnings announcement, declaring it unwarranted. They also pointed out that, notwithstanding the current uncertain economic landscape, substantial drops are not evident. Lifeway Foods operates domestically, manufacturing and selling health-promoting food products that include kefir-based drinks and nutritional supplements. Their offerings are distributed to a wide array of outlets, including specialty and retail stores, wholesalers, restaurants, distributors, education institutions, and military facilities. The phenomenal gain in their stock price today signifies a positive move forward for the company, demonstrating the strength and resilience of their business model despite the ongoing economic volatility. Shares of Agiliti, AGTI, a provider of medical equipment management services, experienced a significant rise by 15.35%, reaching $7.89. This uptick can be attributed to an analyst upgrading the investment decision to buy, despite downgrading the target stock price from $16 to $10. This increased rating reflects the analyst's optimism for the company's potential to improve cost efficiencies, effectively execute their restructuring plan, and address challenges regarding their customer base. The analyst underlined the appealing risk-reward proposition the company's stock presents, with expectations of such allure increasing as the firm demonstrates further evidence of its ongoing recovery. Agiliti specializes in offering comprehensive solutions for the management and servicing of reusable medical devices to healthcare facilities. Their scope of services includes but is not limited to surgical lasers and imaging diagnostic equipments, aiding in the reduction of capital and operating expenditure, optimization of device utilization, and enhancement of patient safety. Beyond their primary services, Agiliti also aids cities, states, and federal governments in stockpiling and managing emergency equipment. Shares of LICY, LICY, plunged, with a significant loss of 54.52%, which was followed by the company's release of its third quarter financial results. Although their revenues outpaced estimates, coming in at $4.7 million against the projected $2.78 million. The earnings per share EBITDA recorded widening losses, stretching beyond what analysts had anticipated. The reported per share loss stood at 20 cents, greater than the predicted 15 cents, while EBITDA landed at a loss of $38.9 million, outpacing the estimated loss of $34.80 million as contributing factors. Cost increases at the company's battery recycling facility, the Rochester hub, drove the firm to conduct an impairment assessment. This resulted in a non-cash impairment expense of $96.5 million being recognized. Narratives around the completion of the Rochester hub point towards a revision of the project's cost, which is anticipated to settle between $850 million and $1 billion according to preliminary analysis. On corollary, the management of LICY indicates that they are in discussions with investment banks to assess fundraising and strategic options to navigate these iffy circumstances. Overarching, LICY's operations are rooted in the recovery and recycle of resources from lithium-ion batteries in North America. They exhibit a proprietary process for recycling and resource collection which handles used batteries and scrap from battery production. Through this procedure, they generate and process black mass and other intermediate products, subsequently manufacturing battery-grade materials like nickel sulfate, cobalt sulfate, and lithium carbonate that drive higher recycling efficiency. Famed for their dedications in providing infrastructure construction solutions, Shimick Corporation has today been listed on the Nasdaq Stock Exchange. The company, denoted by the stock symbol SHIM, had its initial public offering, IPO, priced at $7. This was soon undermined by selling pressure, causing a drop to an intraday low of $6.60. This negative movement marks a 3.57% dip. Shimick is recognized as a specialist in water treatment and other forms of infrastructure construction. The company's operations span the construction of reservoirs, transport, dams, levees, and flood control systems, as well as pump systems. Their reach extends further to include the construction of desalination plants and other infrastructures used for water and wastewater treatment. They continue to provide their services primarily to U.S. customers. Shares of Workhorse Group Incorporated, WKHS, took a dive today following an unexpected loss and lower than expected revenues reported in its third quarter earnings announced pre-market. The electric van maker's adjusted loss per share for Q3 totaled 14 cents, in contrast with the estimated loss of 10 cents per share. Revenue slumped to $3.03 million, a figure sizably lower than the anticipated $20.9 million. Additionally, R&D expenditures came in at $5.77 million, underneath the projected $6.66 million. Workhorse's CFO, Jinan, shed light on the situation, stating that the lag in the FIP, hybrid and zero-emission truck and bus voucher incentive project, has dealt a significant blow to their Q3 results and the company's outlook for the year. However, he added, the company is now poised to move ahead unhampered. On a comprehensive note, Workhorse Group Incorporated prioritizes the design, manufacture, and sale of electric trucks and drone systems for commercial transportation. Targeting the last-mile delivery segment, the company stands committed to providing sustainable, cost-effective zero-emission solutions. Besides their vehicle and drone offerings, Workhorse also endeavors in the development and maintenance of remote data management systems. Shares of LL Flooring, LL, climbed today, recording an increase of 8.16%, which saw the stock price rise to $3.05. This uptick comes on the heels of a takeover proposal by the company's founder, Sullivan, who offered to acquire the company at a cash price of $3 per share. Sullivan currently owns approximately 8.8% of the company's shares. This isn't Sullivan's first takeover bid this year. In May, he proposed an acquisition at $5.76 per share. However, this was withdrawn in August, just 3 days after the company's board announced they were exploring a range of options, with interest from several potential buyers. Sullivan stated that his latest proposal is based on strategic rationale, confident that it offers significant and meaningful equity value and immediate liquidity to the shareholders. Moreover, he added that this proposal does not hinge on securing financing. Moving further afield, LL Flooring is a well-established company in the United States operating in the flooring industry. They manufacture and sell a vast array of flooring materials including domestic hardwood, engineered hardwood, laminate, elastic, waterproof vinyl, ceramic tiles, bamboo, and cork materials. Caters to various customer segments, from do-it-yourself clients and homeowners to builders. LL Flooring operates physical stores with in-house flooring experts as well as online tools. The beauty health company, SKIN, shares are in sharp decline, down by 60.51% to $1.54, following the release of their third quarter earnings after the market closed previously. The earnings per share, showing a deficit of 56 cents, came as an unexpected blow against the predicted 8-cent profit. Coupled with this, the company also reported revenue of $9.7 million, significantly trailing the anticipated $11.7 million. The company further reported adjusted gross profit margin of 62.5% and adjusted EBITDA of $9.1 million, which is a far cry from the expected $21.50 million on a full-year outlook. The company has revised its revenue forecasts downwards to range from $380 million to $400 million, from the initial estimates of $460 million to $480 million. The forecast for EBITDA margins have also seen a downward revision from 15 to 19% to 5 to 6%. In an associated development, the company announced the resignation of its CEO Stanlick effective from November 19, who will also be stepping down from the board. Mr. Beck is set to fill in as interim CEO. The beauty health company is primarily involved in the development, manufacture, and sale of skincare products. With a keen focus on estheticians, providers, consumers, and partners, the company has established a strong presence in the United States and abroad, distributing their products via various channels that include spas, hotels, dermatologists, plastic surgeons, and beauty retail outlets. Canadian Solar, CSIQ, shares took a hit, dropping to $19.60, a significant decline of 6.53%. The steep fall came on the heels of its Q3 earnings report, which was released before trading commenced. The earnings per share and sales for the third quarter of this year failed to meet projections, creating a ripple of concern among investors. Additionally, the company's Q4 guidance, which predicted below expected sales, further bolstered investors' apprehension. Canadian Solar mentioned in its statement that the anticipated total module shipments for the entire year of 2024 will range between 42 to 47 gigawatts. Similarly, the company expects the total battery storage shipments to be anywhere between 6.0 to 6.5 gigawatt-hours. Digging deeper into the shipment projections for Q4, Canadian Solar forecasts that the total battery energy storage shipments will rest between 1.4 to 1.5 gigawatt-hours, with the commencement of 2024 seeing around 720 megawatt-hours contributing to the revenue. Broadly, Canadian Solar Incorporated is a solar power technology company that also ventures into renewable energy. Spanning across continents, from North America to South America, Europe, South Africa, and the Middle East, the firm designs, develops, and manufactures not just solar ingots, wafers, and modules, but other solar photovoltaic and energy storage products as well. Within the global energy sector, Canadian Solar also partakes in the development, operation, and sale of solar power and battery storage projects. Please don't forget to like, subscribe, and share. Your support means a lot to us. If there's any information you'd like us to cover, feel free to leave a comment below.